Eki Teddy member of the Treasury Sales Team at Axis Bank, who joins me to discuss what to expect from the money markets this week. Eki, thank you for taking the time out to join us today. Obviously, this is a midweek update. Bring us up to speed in terms of what we can expect if that auction hasn't taken place here. What are expectations in terms of subscription levels and the rates that the markets are expecting?
Okay, thank you for having me, Esther. Today, we have just notified of the NTB auction, which has already taken place. So we expect another subscription of the bid due to the excess liquidity in the system. And for the stop rates, we expect it to close lower than what the secondary market is trading currently, which is about 7.2%. So we see something close lower than that 7.2% as a stop rate for the 1 year base.
Now, I'd like you to bring us up to speed from Monday up until now, liquidity levels at the market, just a general look at market performance from the T-bills to bonds up until the FX market. But let's start with the money market. Talk to us about what the trend has been since Monday.
For the money market, as at yesterday, the liquidity opened at about 100 billion, and there was another inflow of about 80 billion of the OMO maturity. The overnight and OBB rates hovered around the 10% level. That has been seen. We don't see any difference within, but at the end of the week because there's no really significant activity happening. For the FX market, the CBN has continued their allocation for the FPIs. They've done about 600 million to FPIs now. We expect another allocation coming today. Following the ban of sales of FX to BDCs, we've seen an increase request for invisibles at the FX space, and CBN has actually increased the allocations for those markets. So there's active trades on that side already. On the bond space, the DMO released the bond auction calendar for next week on the 18th of August. And they'll be offering about 150 billion across the 2028, 2036, and 2050 maturities, 50 billion per maturity. So we expect to see that happen as well next week, and expect that there will be high participation of that as well.
Now, looking at the yield curve in the last 2 weeks, what would you say, where would you say we've seen the most action, and how would you describe investor sentiment or their trading psyche, as it were?
So for the fixed income space, there has been active buying because of the rates at the markets. For the Treasury bill side, the rates have been hovering around that 7%, as I mentioned earlier, and the investors have been actively participating on that side. On the bond space, the rates are almost trading around the 10% levels, and there's also active sales on that market as well.
Now, let me take you back to the FX market. We've seen, recent developments in the last 3 weeks with the ban on the FX sales to BDCs, etc. But before then, the CBN has been clearing this backlog, since last year. Let me just limit myself to last year. But would you say that the CBN is making a headway in terms of all the demand backlog from FPIs? Would you say that with higher oil prices and that slight accretion to the reserves, the CBN is making a headway in clearing that backlog of demand?
Actually, the CBN has they've tried to do their best in supplying this FX to the FPIs, because I think what they're trying to do is also to attract them back into the economy, to bring in their food into the economy. They've been consistent they actually resumed this intervention in April, and on a bi-weekly basis, we've seen flows from April to date consistently. I think they only intervened throughout December, and there was a long pause till April when they resumed again. So, yes, I think they're doing something to ensure that they take out these flows that are repatriated out of the country, and their plan is to get it back as soon as possible.
Now, do you see rates remaining steady at the NAFEX window around 4.11 and the INE window, I think somewhere around 4.29, correct me if I'm wrong. Are you expecting rates to remain steady?
For now, we expect the rate to remain stable. We don't see anything changing for now, because the CBN is also trying to address the high request for the municipal space, so I would have spiked up the rates at the parallel market. So now that the demands have come into the banks, the rates are expected to remain on these levels, the NAFEX rates and the like.